Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so we're gonna hop right on into the charts. The dollar. Let's start off with the dollar. So, dollar's actually been underperforming my expectations thus far. So it's still holding this rising trend line, but as you can see, it's just building off doji after doji after doji. This candle here on the 16th of January, I was seeing some strength, potentially a move to the upside, but the following 2 days after was really indecisiveness, a lot of weakness here. And now today's daily candle, which has about an hour and 20 minutes left, isn't looking relatively strong either. So we actually may see a breakdown from this rising trend line sooner rather than later. I have been penciling in a rise going up at least back towards 104 and then potentially finding some resistance to break back down, or even an extended move higher to fill out these bearish fair value gaps and maybe even tap into the low end of this upper blue zone by 106.56. But as of right now, the price action isn't looking resolved to go up higher. We may actually see a breakdown. But before it happens, we want to make sure to keep our heads on straight. We don't want to project on what may happen. We're just going to respond to what is happening. And as of right now, it is showing weakness, which is a good sign for risk on assets like Bitcoin and risk on assets in the equity markets like tech. So we are looking potentially at another leg up in the coming days to weeks. But it does remain to be seen. We'll have to give this some time. We are coming into the end of the week here, so seeing how this daily candle closes and how tomorrow closes will give us a better idea of what to expect. Now let's get on to the Dow, see what that's telling us right now. So Dow's having continuation to the downside, which has been expected. We have been mapping that out. Came back into the bearish fair value gap, failed off of it, and it even printed one of my favorite reversal structures. So a 3 candle pattern, you have a bullish move up, bearish doji, and then a bearish engulfing candle right after that doji, which then implies continuation. And that's what we've been seeing, continuation to the downside. And I do think we are going to likely see more continuation to the downside, taking out these lows right here, okay, and coming into these bullish fair value gaps down here and grabbing the liquidity under this wick as well. So watch us trade back towards this descending trend line and start tapping into the liquidity lower down here, and then we'll look to see, are we going to make a higher low from these lows down here? So will we make a higher low from here to here, and then potentially have continuation up higher, taking out these highs and pretty much beginning a short-term uptrend? So we have a lot of things to look forward to here, whether we're going to get a continuation of the macro bear market, or if we're going to have a continued bear market rally to the upside. So watch closely on the Dow, because this is going to pretty much give us a good indication of what we can expect in the next 1 to 6 months. All right, next is S&P 500. So similar to the Dow, came up towards the descending trend line here, but unlike the Dow, has never been able to breach past it since the all-time high was made. So watch for this to continue lower, and it looks very likely to take out these lows here. I'm actually seeing S&P probably get back towards 3,700, especially if the Dow does break back towards 32,000 and then 31,500. Those are the two zones that I'm watching the Dow to get back to, and in that environment, you'll probably see the S&P trading down here, and just like the Dow, it may be building out a higher low from the low it's made here if we're going to have that continued move to the upside within these next 6 months. Next is the NASDAQ. So trading within this bearish fair value gap, pretty much filled it completely, wicked through. We do have some liquidity still above here, and now it's continuing down. Watch for this to come all the way back down towards 11,000 to 11,050 and potentially even lower. See, the NASDAQ could actually come back towards the base down here and start attacking this low wick as well. So unlike the other two, S&P and the Dow, the Nasdaq's made a triple bottom structure, whereas the S&P and the Dow made like a higher low structure. So watch for this to come down lower and potentially take out these lows. And it never even was able to make a higher high as well compared to the S&P and the Dow. So Nasdaq has been far more weak when you compare it to those two, which makes sense because it's probably the most overinflated, it bearing most of the tech stocks, in the U.S. economy. So we're going to continue to watch the Nasdaq, but it will get dragged around to whatever the S&P and Dow are doing. Next is oil. So oil's chart, again, been following the playbook since we've mapped it out. Just staying within this bullish monthly structure, weekly structure, and made the higher low here. Had continuation, took out these high pivots right here, then wicked up, almost tapping the bearish fair value gap here. And to me, it's still likely to go up higher, fill this out, and continue up, because as we get further into winter, you're likely going to see the demand spike for oil, especially in Europe. I've been ringing the alarm bells pretty much all year last year, and I'm going to continue to do it until it happens, okay? Watch out for the oil chart. It's a very frightening chart. Again, it has a lot of repercussions in food prices, in transportation prices, and it's only showing me more bullish activity that we're likely going to see oil rise. So whatever the news is telling you, don't believe it. The charts will show you the future. Okay, big money is showing you the future. They know what's going to happen because they help build what's going to happen, and it's very likely you're going to see a spike in oil prices. So you will see continued rise in food prices and energy prices, unfortunately. So prepare yourselves, be responsible, and try your best to deal with what you have, in front of you. Okay. All right, next is gold and silver. So gold having that continuation higher. Beautiful moves on gold. I mean, this is to me, this is really showing this is showing us that there's a fear going out into the markets, and also that the dollar is really not finding any strength. So when I look at the gold chart, I am getting an inclination that maybe the dollar won't hold that trend line. Maybe it will start to break down through, and we won't get any significant pop in the dollar until much lower, maybe 100 to 97. But gold has been incredible. It's continuing higher. Now that it's filled out this bearish fair value gap right here, watch for the tap into the up towards this higher fair value gap here around 1950 to 1980. You're probably going to see a trade within there, and I do think you're probably going to see gold tap towards 2000. Now I am looking for that area to be rejected, at least have a major retracement back down or some sort of bullish consolidation to break past 2000, because there's going to be a ton of sellers there. It's a very good price for many, especially if they bought somewhere down here. 2000 is going to be very attractive to let go of some of those profits. So watch for 2000 and really this whole upper zone up here to act as a major resistance zone. And if we are going to break through here, I would look for a consolidation prior to that, somewhere like within it or just under it, to then have continuation. Okay, this is very extended though, very extended, so be very careful. I would not advise buying the top of this move so far. It may go up higher, but you are playing with fire if you try to jump onto this train down here. You should have jumped on when we did down here. Okay, though we have let go most of our gold positions somewhere around here. I'm not complaining about that, but this is an overextension. If you were going to be in this move, it would have been down here with the Lemon Garden premium members. All right, next is silver. So silver failing off of these bearish fair value gaps. So unlike gold, again, underperforming gold. It's been like that all of 2022. It seems to be continuing that. And I was asked a question about that by one of the members. Why is that happening? My best guess, it's because silver's used more so than gold in industry. So the silver price is far more important to stay at a relative area rather than gold, because silver's in just about everything: solar panels, phones. So when silver's price gets too expensive, that could really affect I would say high value consumer products, but also some products that are considered necessary, like a smartphone these days. So it's going to be held down quite a bit more than gold, but eventually it will be following gold. Maybe not as dramatically, but it will see a rise in price if gold continues higher. But I think silver is giving us kind of the canary in the coal mine sort of structure here, that it's likely going to turn over and come lower. And I think gold, even though it's overextended and it is showing very very strong moves to the upside, we'll also find some selling soon. Okay, so watch for silver to start breaking down, and you probably will see gold slow down during that time as well. All right, now let's go down. Let's go to Bitcoin, see what's going on with Bitcoin. So Bitcoin's had a wonderful rise of late, just like the rest of crypto. So breaking this wedge structure, bullish, beautiful break. Now we're slowing down. Now I have this horizontal line here. It's at 18,376.59. So that level is actually this weekly level here, and the monthly level. Okay, so it's more important on the monthly. So remember how I mentioned on, I believe it was the Dow, right? So let's go back to the Dow real quick. So stick with me. Okay, I mentioned on the daily here that this is my favorite, one of my favorite 3 candle topping structures. So you have bullish rise, bullish candle, then bearish doji, and then bearish engulfing. Okay, that's usually a sign of a topping pattern. Okay, and it tends to lead to continuation to the downside, like you're seeing here on the Dow. Well, the same can be said to the downside for a bullish engulfing candle and a bullish doji. Okay, so let's go back to Bitcoin. So on the monthly, you see a big drop, slow down, then a doji after a bearish candle. So here's your bearish engulfing candle, doji, and then a bullish engulfing candle. Now this candle on the monthly has about 12 days left, so it's still early, but it is quite mature. All right, so clearly this is a very powerful month so far, but I have this trend line here at 18,376 to pretty much show you visibly this is the invalidation point. Okay, so if we could see Bitcoin, let's say, sell off all the way down to 18,376 and under, it would invalidate this potential 3 candle bottoming pattern. Okay, if it doesn't happen on the monthly, then I'm going to tell you right now, this is very bullish. Okay, it's very bullish in the short term, and it will make me believe that we're likely going to have a fairly significant bear market rally over the next, couple months, anywhere from, rest of February to maybe mid-spring. Okay, so about 1 to 6 months, you may see a rally, and I would look for it to come towards this bearish fair value gap more on the low end on the monthly chart. So right here is where I would be looking for to get to. So as low as about 30,000, 32,000, and as high as about 37 to 38,000, and that's when I would look for a major failure from Bitcoin, and then probably continuing the bear market. Okay, so I'm looking for a pretty sizable move for Bitcoin in a couple months. If this confirms, then we should see this move quite high up there, and then look for a rejection and pretty much just making another lower high from the macro, and then probably making new lows. Okay, sometime this year. So just keep that in mind. I'm bullish short term and relatively midterm, depending on how you're measuring it. So about 1 to 6 months, I'm going to be fairly bullish unless this gets invalidated, this bottoming structure. But once we get towards those levels, anywhere from, I would say, 28 to 38,000, that $10,000 range, that zone, it's prime for a major continuation of the bear market. So be very, very careful. I would not look for the moon here. It can happen, it's just not likely. So looking at the monthly, I'm very bullish. Looking at the weekly, bullish as well. I had a bullish breakout of this descending wedge structure, which implies continuation. If we look at the measured move of this wedge, we're looking at from the breakout here, it would bring us to about 26,400, which is also the top end of this fair value gap zone right here. So we have this bearish fair value gap zone here would be pretty much the target, getting this whole fair value gap filled, which would then lead us probably some room to come up towards that 29,000, which is this fair value gap right here. Okay, so we have a lot of liquidity above our head to tap into, and this will bring us into the pretty much the zone of watch out, we could reverse to the downside and continue the macro bear trend. Now the daily, what's the daily showing us? So the daily showing us this was some indecisive candles. Had a nice bearish candle here, nice little sell-off. Now today is doing well to fight back, but as of right now, this today is still losing to this bearish candle. This implies, in my opinion, at least right now, barring any major sell-off in this candle within the next hour or so, as a consolidation will likely begin. Now it's going to look like a bullish consolidation in my opinion. Now what am I seeing here? I'm seeing probably you're having some sort of cup structure here, okay, and you'll have some sort of descending price action like this. All right, now this structure will likely break bullish and then continue towards the upper ranges of these fair value gaps on the weekly and monthly zone, and then we'll probably look for a reversal back down, like I've said before, to come lower. So I'm looking at a bullish structure here building. Potentially we'll have a much larger consolidation over the next month or so, which would then create more of like an inverse head and shoulder structure, something like this, okay? And then continuation. So in my opinion, we're looking great for upside within these 1 to 6 months, but once we get towards that zone, 28,000 to 38,000, I would watch out and look for a major continuation of the bear market. Okay. All right, everyone, that is it for the market recap. If you are interested in any of those services I mentioned, whether it's the day trading, the swing trades, or the tutoring services, make sure to check out the Patreon link in the description below, and or join the Discord and ask your questions there. I'm always active, and I'm always open for questions. And I've been doing a lot of just streams on the Discord, so you can hang out with me, and I pretty much put out trades there too for free, so it doesn't really matter. You can hang out with me and get some trades one way or the other. And if you have any suggestions for me in regards to covering cryptos or stocks, I do have a crypto stock highlight room in the Discord. You could pop the name and the ticker of that asset, and I will do a highlight video for you. So you'll have an entire video on that asset if you would like me to go over it. And remember, everyone, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.